Hi guys, welcome back to the channel. Today I'm going to take a look at Bitcoin and I'm going to tell you where I think that the price is going over the next few weeks and months. So if that sounds something that you're interested in, please do continue watching this video because I think today's video is a very, very important one. Probably the most important video I've done in about a year's time. So let's get straight into it. And as you know, on this channel, I have been very, very bullish for the last year. I pretty much was calling a Bitcoin low in November of 2022. That's where we did ultimately see the low. And since then, it's really been up only. All of my sort of forecasted price moves have pretty much come to fruition exactly as expected. And now I'm actually going to put my neck out there and say, I do think we have seen a local high for the price. And I'm just going to run through the reasons as to why I believe a local high is in. The first one is that we have now retraced to the 618 fib on our bull market high to bear market low. This is a retracement that we actually found resistance at during the last cycle. So look, I mean, I'm a believer of the 4-year cycle. I'm a believer that where whilst history doesn't necessarily repeat, it does rhyme, and that is something that we have seen happen time and time again in Bitcoin. The blueprint is there. Just look in the rearview mirror. Just look back to the last 4 years, and you can pretty much see where the price is likely to react. And we have definitely seen a reaction to the 618 retracement level so far. We combine that with a long run ascending trend line. We also combine that with a Tom DeMark 9 sell indicator. So if you don't know too much about Tom DeMark sequential, this is basically a candle counting system. Typically, you'll see moves of approximately 9 candles in one direction before you get some sort of consolidation or even a reversal. So that seems to be happening right now with the price of Bitcoin. We've also got this long wick here. So that tells us that sellers have been able to push this candle down. That tells us there's a lot of selling interest, a lot of selling pressure there that's been able to reverse that from being a bullish candle into being a very bearish candle. And that's also come through on high volume too. So this is the highest volume we've seen over the last year, really until March last year. And you've got to think of volume as when the volume's high, that means the sample size is bigger, more participants are in the market, therefore price action tends to be more reliable when you have higher volume. So that really tells me that we should really respect this reversal candle as being a serious one. And really the other thing to note as well is that we have some RSI bearish divergence. So this is where price pushes higher, however, the RSI comes lower. So there's a combination of multiple factors there. One of these factors in isolation is usually a warning sign, but when you get multiple factors all telling you the same thing, i.e. price has topped, reversal is coming, then you really, really have to pay attention and take action. And I took some action last week. I think at this point, I'm not going to say it's too late to take action, but you really need to make a decision as to whether you feel at this point it's worth actually getting out of some of your positions or whether carrying your positions. And obviously, everybody's position is different. I mean, I'm in a situation where I do have positive cash flows each month. So, you know, I've taken off a fairly small portion of my holdings last week. And should we go lower, I will wait for levels to position back in and obviously add in sort of new capital inflow back into the market at those levels I'm interested in. I think if there's every chance that price does push up a bit higher here. And if it were to push up a bit higher, I think are probably going to be opportunities for us to take short positions or look to at least take some more off the table. Obviously, I could be completely wrong on what is about to happen, and we might still keep going higher. Nothing in trading is guaranteed. Something all of a sudden could come out and the market could really start to pump again. And for me, really, if we start seeing closes above 46,000, then I will have to reassess my analysis. But I think for now, based on the reaction I've seen over the last few days, at least, I'm pretty confident that we have seen the local high in. And what I want to share is, where do I think price is going to go next? So if we just look at our levels on the downside, then I think really you have to look at these moving averages. We've got the 20-week moving average here. Some YouTubers refer to this as being our bull market support band. However, if we do look back in the last bull market, we actually came down and we found support at the 50-week. So the 50-week moving average is currently down here, just above 30,000. So, I think those are two targets we have to look at. And I just want to say that markets always correct, and they correct either through time or through price. So what I mean to say is, we could have a very, very sharp sort of sell-off here, which will happen quite violently and quite quickly, which would be a correction through price. So if we did see a correction through price, I would expect us to come down over the next week or two quite aggressively, maybe coming as low as about 34,000. And I've actually drawn that on here as a box of support, because I do think there will be very strong market support at that level. If we just draw on a Fibonacci retracement, we can actually see 618 level is there coming in at that yellow box. So I do believe that will be strong support. And also I would expect that in sort of 2 to 3 weeks time, this 50-week moving average will start to come up and line up with that sort of 34K area. So I think if we get a sharp sell-off, I'll be looking to personally get back into the market and accumulate positions in both Bitcoin and altcoins around about that sort of 34, 35K zone. What we might do, however, is we might actually see a correction through time, which is a lot shallower, which is more drawn out, which is more frustrating, which really annoys both the bulls and the bears, obviously mainly the bulls, because it's not nice to see prices going lower when you're long, but also the bears that are waiting for lower prices around sort of 34K and potentially lower. They're actually going to miss out on getting into this market should price not get down to those levels. So the real thing I can compare it to is what we saw earlier on in the year, where the market basically consolidated, it corrected a couple of times, and then after a good multi-month consolidation, we then started to take off, and it was around about half a year. If we actually look at the sort of the high of that initial consolidation that we saw, and if we actually measure that to where we broke out, we're looking at about 28 bars. So we are looking at over half a year correction. Obviously, if we did see a similar correction of 28 bars from our high, just sort of going across, then we can see that will actually take us into the second half of the year, to the end of July. So potentially we actually see that type of correction where we just kind of drift sideways. And I think some of the people that are saying that altcoins are looking strong and they expect to see an alt season, I think are really sort of hoping and wishing for that sort of scenario where Bitcoin does ultimately go sideways in a range and probably corrects down to no lower than about sort of 38, 39,000, and then starts to pick up again. So we have to wait and see. It's not yet clear whether we're going to see a sharp correction down to prices of sort of 34K, or whether actually we're going to get a longer, more shallow correction. There's arguments both for and against. Things like leverage is too high and we need a flush out and a shakeout, and it needs to be violent, and altcoins need to sort of come back off and retest some of their lows. Those are obviously cases that would favor more of a sharp correction. At the same time, people will say, ETF is here, this time is different. Previously, our correction or our worst correction last year was sort of around 20%. If we just look at this one as well, which is obviously sharper, so it's a little bit different, was 23%, but you can kind of see this was a correction in price. This was more of a correction through time. And obviously, if we were to correct around about sort of 38, 39K, you can see it's just over a 21%, 22% correction, which is pretty in line of what we saw the last time we corrected. So at the moment, it's unclear, but there are arguments for sort of one correction versus another type of correction. As in terms of exactly what it's going to be, well, I'll obviously try and keep everybody informed with further clues that we see as I see them. So that's a pretty good reason to subscribe to the channel if you're not already subscribed. And I think I'll just wrap it up there by taking a final look at the DXY. So obviously this is a benchmark, or sorry, a measure of the US dollar against other currencies. So we can see the DXY is currently having a go at resistance, and if it breaks that resistance, the DXY would probably have a run up to this descending trend line here. So obviously this would support the argument that we are likely to experience a greater correction in the price of Bitcoin and cryptos. And also, if we look at stocks, we can see that at the moment, the NASDAQ is showing a little bit of weakness, but we are still sort of fairly high up. So it remains to be seen what actually happens with stocks. I have drawn a Fibonacci retracement tool here, and I think, look, a level I'm personally looking at is this 382 fib retracement that would be the highs of this run up. So potentially turning these highs from resistance now into support. Obviously we came down and we tested those in December. Potentially we come back and test again, and we start to make a little bit of a range, kind of similar to what we've seen in the past with stocks. That wouldn't be anything out of the ordinary. Obviously we have our 20-week moving average support coming up as well. And if we look in the past, candles have struggled to really close below that 20-week resistance, 20-week moving average as support in previous sort of bullish phases of the market. So I think, you know, coming down to that level, that sort of 382, testing our 20-week, and then if we hold that, taking off again, I think through the latter part of the year, I'm still very bullish on stocks, and I still do think that stocks can hit all-time highs. And it's a similar situation with the S&P. And another thing I've just also noticed is, obviously, as we're looking at Bitcoin and we're noticing that we've had this reversal candle, and obviously we've had this Tom DeMark 9. I mean, just look at some of these candles on stocks. We had this Tom DeMark 9 coming in at the high on the NASDAQ. We had the same on the S&P. And I also just noticed on the dollar as well, we had a 9 at this swing high. We had a 9 candle. Actually, this is a bullish 9 candle because it's come at the end of a downtrend. So this is a red 9, obviously reversal candle at the most recent swing low. So obviously this only really gives us more, you know, supports more the case of the sort of strength and importance of the Tom DeMark as an indicator, and actually just goes to really support our short-term bearish outlook in terms of calling this a reversal. And like I say, levels on the downside are really sort of 39, 38,000, and then down to about sort of 34,000. So I'm going to wrap it up there. Hopefully you have enjoyed this video. Please, again, do smash a like if you have enjoyed the content, and I'll come back very soon with another update. Wishing you all to have a great day, and speak to you again soon.